Welcome back. Thank you so much for being here. We've got a wonderful start with lots of things to cover for today. So excited to bring you out of the good old news as we try to do every single day. So let's chat about it all and get started. And of course, welcome back to another Meet Kevin report. It's episode 101. Of course, we're going to talk about China today. There's also Tucker Carlson claiming that now we've got aliens as he posted his first return to Twitter. Uh, look, I'm all for putting together a great piece, but the commitment to that's it. Now we know that aliens are real. He said that with full sincerity, and I maybe we leave open the benefit of the doubt that aliens are not real. That maybe UFOs are probably many a times just children's party balloons floating around the sky. You ever wonder where your balloons go when you lose them at a birthday party? Who knows? But there may be the suspicion that children's birthday balloons end up as UFOs floating around in the atmosphere that people can't identify from far away. Who knows? It'll be really interesting. But this is not going to be a political video. I just thought it was very interesting that on Tucker Carlson's episode 1 on Twitter, which was a great episode. I mean, overall, great talk on Ukraine and Russia. I think it's worth watching. But on his first episode, we could say Tucker believes in aliens. So anyway, well, let's focus on the economy. Most importantly, probably over the last 24 hours, I think the Chinese news was a little bit of a surprise to a lot of folks. We got Chinese export numbers that were significantly slower than people had expected. This is something that a lot of folks were thinking wouldn't be possible. And it was just yesterday, which is remarkable, but just yesterday that we were talking about how Morgan Stanley thinks that China is going to somehow lead the entire economy back into inflation. And just yesterday, I remember saying that's the same story we were fed in December. In December, it wasn't true. And that was after the COVID reopening. What now with no new reopening? All of a sudden, China is going to boom and cause inflation again? No. Now, Chinese production falling more than expected. Chinese exports plunging by 7.5% in May, a lot more than expected. There was imports also fell 4.5% from a year ago. And that's actually not as bad as expected, which is interesting because you kind of got like a duality of a mix there. You had an 8% forecast of a fall, only about a 4.5% fall on imports, but the exports was more of the issue, and that's because people see China as really the still today, even though we're trying to expand our manufacturing capabilities outside of China. A lot of folks still suggesting, oh well, Chinese manufacturing is where it's at, and if Chinese manufacturing and exports slow down, then the entire economy is slowing down, the global economy. To some extent, that's true. Ultimately, we are expecting much of the world to suffer from how much prices have gone up, from the inflation that has occurred, not necessarily the inflation that's still occurring, mostly because that seems to be fading down. But the inflation that has occurred is disproportionately going to affect poorer and more developing economies, and it's probably going to benefit, I know it sounds crazy, but wealthier countries, especially Europe and the United States. Well, Europe's not a country, obviously, but countries in Europe and the United States. Consider, for example, the DAX in Germany, the DAX stock market. Right now, Germany is expected to potentially be in a recession, not just this quarter, but then also potentially going into next quarter. That's the current forecast. And when you look at the largest 40 stocks in Germany, what do you find? We are off all-time highs, but only barely. But only barely. We are down 1.8% off of basically all-time highs in the German stock market, even though we're technically in a recession, which is fascinating. But anyway, going back to China for a moment, this idea that China is going to create and export this massive inflation continues to be false over and over and over again. China is expected to stimulate companies once again, but that stimulus will probably be softer than expected because China generally doesn't want to create a massive inflation problem. They don't want to devalue their currency even more than they already do. They try to control their currency at a similar level to, well, a level that is pegged to the dollar. But if they print too much, they're going to mess it up, and then they create other problems. So the Chinese news, personally, not a surprise. When I saw it, I thought to myself, okay, well, that's what we expected. China's not going to create or export massive inflation. Right now, they're actually just exporting less stuff in general. And it's difficult to export less, it's difficult to export inflation, I should say, when you're exporting way less stuff than you used to export or than what economists were projecting, because that means you probably have more crap left over that you're kind of like, oh, we need to get rid of this stuff. What do we do with it? How about we drop prices? Oh, darn, Econ 101. But anyway, another thing to consider, too, is that there are leading indicators of determining whether or not Chinese industrial production is likely to beat or lag. And one of the tells for this is you could look at either iron futures or you could look at copper. Both of these are your industrial metals. Iron has had a little bit of a rough ride, though, because a lot of iron, well, obviously iron is steel, hardened iron is steel, and that's used in real estate construction, right? Iron I-beams, steel beams, you name it. These are used in real estate, and real estate is absolutely something that's sandbagged in China. So I personally haven't been using iron as much. I've been preferring copper because, especially with the EV rush, everybody's been saying, oh, anything EV related is going to basically go to the moon, and you should just invest in commodities related to electric vehicles because there's going to have to be a massive demand for them. The problem with investing in commodities is you always tend to find more of them, which is kind of remarkable. For example, somebody a few months ago was like, Kevin, you got to invest in lithium because the EV craze is going to drive all this EV demand for lithium. And I'm like, they're going to find new ways to extract lithium that we can't even imagine right now. Guess what I just read over the weekend? I just read that now, as a byproduct of fracking, the brine solution that comes up, as a byproduct of fracking, that brine solution could actually have a bunch of lithium in it that you can now somehow filter out. I don't know anything about how that crap works. The point is, like, here's something that we thought was waste that can actually now be liquid gold. And it's available. It's incredible. So American ingenuity, and really, I should say just human ingenuity in general, is really, really impressive. And so we always tend to see this softening commodity prices go up. More people get in and try to figure out ways to extract commodities, and sure enough, commodities end up coming back down. The commodities are still up, obviously compared to pre-COVID. I mean, look at, for example, what you've got here. This is copper. You've got you're substantially higher on a pre-COVID basis, or compared to a pre-COVID basis. We're sitting at about 3.6 right here. We were sitting closer to 2.6, 2.7, but well off the highs of this 4.4, 4.5 that we saw during 2021, or even what we saw earlier this year where we were knocking on the door of 4 again. You did have a nice little commodity resurgence here. In my opinion, and I remember saying this then as well, a lot of this was because of Chinese speculation. The speculation that, oh, here we go, China's reopening. Here comes all the inflation from China. No, no, once again, complete nonsense. So again, the numbers this morning, well, last night really, not the biggest surprise ever. Well, in other news, there's now, I find this very, very interesting. Listen to this. Tesla's rapid adjustment of its battery supply chains means all of its Model 3 vehicles qualify for U.S. federal tax credits. We talked about this just the other day, where all of a sudden now, because they've either adjusted their supply chain or reinterpreted the law, a combination of both, probably a combination of both, Tesla is now offering a full $7,500 on all of their electric vehicles. Which is great because now all of a sudden, especially the Model 3, now all of a sudden their least expensive car also gets the big fat tax credit, which is fantastic. In fact, if you want to buy a Tesla or you're thinking about it, help out the channel and these free live streams you see in the morning by going to metkevin.com/Tesla. That's my referral code. Both of us win if you use the referral code. So it's great. You can go there and you can see the benefits because you change them every day, it feels like. Just go to metkevin.com/Tesla. Anyway, but what's incredible here is Reuters just put together a piece that first of all, the Biden administration has confirmed, this was a big thing that was missing. The Biden administration has now officially confirmed that all Tesla Model 3 vehicles qualify for the $7,500 vehicle tax credit. Just a couple days ago, when we were talking about Twitter and Elon Musk and Tesla, we were like, Tesla's saying it's $7,500 on the website, but that hasn't actually shown up on the IRS website yet. But that's okay, because sometimes the government's just a little bit slower. Can't blame them. Not bad people. It's just a bureaucratic process, okay? Although maybe you could argue. I know you can argue a lot of things with the government. Let's not go there. But the point is, and now the Biden administration has confirmed that the $7,500 do apply. Now, listen to this. A Model 3 starts at $40,240, and the price may fall to $20,000 or $25,240 when the $7,500 federal tax credit and another $7,500 from the California rebate kick in, depending on your income. Toyota Camry is listed at $26,320 and higher, which now makes the Tesla Model 3 less expensive with those credits in California than a Toyota Camry. This is insane. I want to look into this $7,500 California credit. But if that's true, that certain thresholds are going to get a $7,500 additional credit in the U.S. For a Model 3, this is remarkable, because now this is bringing you to a there's your $25,000 car. You didn't even need a new car. You just needed more tax incentives. Thanks, government. That's crazy. So then what do we have here? Let's see here. Some people are complaining that there's a little bit of a connectivity issue. Let's find out what's going on. I don't know why there would be a little bit of a connectivity issue, but we can get to the bottom of it. We are on the Ethernet. Yeah, that's pretty incredible. So let's find out really quickly what's going on with El Ethernet. No, it's showing I'm getting 600 megs. I don't know what's going on. I could just plug it in again, I suppose. Here, let me just restart it really quick, because the amount of spam here about this is ridiculous. Hold on. Okay, hopefully that's better. Okay, anyway, well, hopefully you can at least hear it. I mean, as long as you can hear it, that's what matters. No, it's still saying the same problem. Connection unstable. We're plugged in. Okay, here's what we're going to do. I'll put this up. We're going to go black for like 2 minutes. I'll be right back. returned. It better be better now. Because if it's not better, I'm going to start yelling like Ben Mala, and I'm going to get really upset around here. So it better be better now. And then I'm going to I don't think it's better. I just got the red flag. It must be an AT&T issue or something, because we got like fiber optic out here, and it never does this. If it's not better, let me know. Just complain again, and I'll just have to start like hotspotting or something like that, which is insane to think about. But anyway, I'll stop talking about it, and let's get back to talking about things like business that we got to talk about. It's good? Good so far? Okay, good. Good. We'll just pray. Thank you. All right. What was I talking about? Somebody's writing it was better. Oh God. It better stay better. I don't want to hear any more crap. Okay. All right. So where were we? It's getting hot in here. Whew. Getting heated. Okay. So where were we? I figured it out. In the meantime, I figured it out. What did I download? Hey. Just because I'm testing the API out for the new Vision Pro does not mean... Oh, maybe it does. Did you know that if you make under $135,000 in California, you could now qualify for a Tesla as inexpensively as $25,000? That's less than the $26,000 it would cost you to buy a Toyota Camry. Yeah, all you have to do is go to cleanvehiclerebate.org and apply within 90 days of your purchase in California, which means you can apply before to make sure you qualify. And then you would qualify for an additional $7,500 from the federal government. Your net out the door purchase price for a Model 3 Tesla would be just $25,000 roughly, consider some of the other fees and stuff that goes into it. And if you want to use a referral code, go to metkevin.com/Tesla to make sure you lock in some extra benefits while you're at it. But this is remarkable because it means the $25,000 Tesla is already here. Okay, so let's see here. Let's just write down a few things really quickly. Sure. Okay. Okay, cool. Another thing to talk about is I think we just got mortgage applications. Yeah, we did. Mortgage applications came in at minus 1.4%. Those always come out early. They come out at like 4 a.m. That's the prior release was negative 3.7%. Real estate's holding up pretty well though right now. We're still not seeing that increase in inventory that everybody was waiting for, and we'll see how that evolves. Let's see what else here. Dave & Buster's looks like had earnings, which is pretty exciting. It just seems like people are still spending money like crazy, which is remarkable. In fact, beyond just the anecdote of that, a Citi had a report that even though spending is down year over year compared to last year, retail spending, what you're finding, at least certain credit card spending is, this was a credit card spending report, and the same was true compared to 2020. It's basically our stimulus eras, 2020, 21, 22. What you're finding is the negative is becoming less negative. In other words, you're starting to see some growth again. The numbers are becoming less bad, which is remarkable because that to some extent means maybe we're already through some of the kind of depths of despair that the bears keep talking to us about. But yeah, that's really remarkable if you think about essentially just the economy keeps wanting to spend. I think what it is people want to live. Nobody wants to be in a recession, and I understand that. I mean, who wants to be in a recession? Nobody. The only reason businesses and individuals essentially stop spending is because they have to. Most people don't stop spending because someone on the internet says we're going into a recession or on TV. And so you just keep spending to the extent that you have money. And the reality is people are working hard and they're making lots of money, and they're making more money than they made previously. Yeah, some things are more expensive, like everything. But just because our core spending is more expensive, so is our discretionary, or we have more money to spend on the discretionary spend, which that's where it seems to we're starting to see the disinflation, or I should almost call it the deflationary fight, which that would be interesting to see if Dave & Buster's is finally reducing some of their prices on their machines. I'll tell you, it seems like the machines have gotten pretty darn expensive. The last times I've gone to Dave & Buster's, I'm like, wow, it seems like once again they're raising the prices on the machines, and you almost have to go on Wednesdays. Wednesdays, by the way, at least in our area, Dave & Buster's is half off. Like all the games and stuff are half off, which I always find that very desirable compared to you go on a Friday or Saturday. It just feels like you're getting ripped off. Yeah, big fan of Dave & Buster's. I'm not an investor in Dave & Buster's, but I'm happy to hear that the earnings came in well. So what else do we have here? Trial court also found that Elon Musk did not push the EV to overpay for Solar City. Delaware Supreme Court ended years of litigation over the $2.6 billion deal. I actually think they did great buying Solar City. I've gone through the lawsuits as well, and obviously there have been a lot of issues associated with Solar City, fires, Walmart fires. There's been a lot of negativity about the panels, but I never thought the Solar City deal was actually a bad deal. It was a fantastic way for Tesla to go from basically not a solar player to a solar player. And I miss the days of when they did the Tesla solar panel lease. That was a steal of a deal because you had the right to cancel at any time. That was an industry game changer, except they were just giving away money. That's why it was a game changer for a hot minute. Ford did also now expand a recall to 125,000 sport utility vehicles and trucks because of failures that may cause an engine fire. Various SUVs, Mavericks, Maverick compact pickup truck, the Escape, the Lincoln Corsair, hybrid plugins. Ford isolated the engine manufacturing issues that can cause the engine to fail prematurely in the event that engine oil or fuel vapor may be released, increasing the risk of fire. Yikes. Okay. Yeah. All right. I would like to see, though, if we can, let's look at let's look at the numbers for Dave & Buster's. And then that earnings call would be quite interesting to see as well. That's not going to be out just yet, at least the transcript for us. But I do think that'll be interesting. Looks like Campbell Soup also just beat. I did not realize that Campbell Soup was its own entity. I could have sworn Campbell Soup would have been owned by some conglomerate. So, Dave & Buster's comes out with an EPS of 145 versus 125. Revenue, however, missed at 597.3 versus 604. Interesting. And let's see, Dave & Buster's jumped a little bit, 4-5%. And yeah, that's it. We'll have to see what their earnings call reports on those prices. Okay, good. So let's see here. What else we have? Let me see some of these. There's some commentary I wanted to answer. Okay, somebody donated $5. By the way, this was actually a perfect example of why you should love StreamYard. Even though I had connection issues, StreamYard just and who knows, it could come back again. But StreamYard kept the stream up. So I was able to restart and reconnect and just pop right back into the live without you having to click a single button. That's kind of cool. That's all thanks to StreamYard. So shout out to them. They're a paid partner of the channel. Just go to metkevin.com/StreamYard to learn more about them. Helps the channel when you go to that URL. Just metkevin.com/StreamYard. Simple. Okay, so the question that somebody had here was, Kevin, when will we be able to invest in the non-accredited round for HouseHack? So we just completed the audit with our big old auditor. The warrants and everything took a little bit longer. I have the PPM that I'm working with the SEC attorney on. I just dropped the AI course yesterday. So I've had the PPM since Monday, but I haven't been able to work on it Monday or Tuesday. So now it's on me. Like, it's actually on me. So I need to finish the PPM, which I'm going to do today because I got to fly to Texas and back. So I got some flying ahead. I got like 5 hours on a plane ahead of me today. And then when I get back, I should be able to send the PPM to our SEC attorney. She'll put her, doodads on it or whatever. And hopefully we're submitting to the SEC within a week here, which is really exciting to me. because I think within a month or two, we should have a green light from the SEC and be qualified. And so hopefully by July or August, well, House Hack should be available for investment by basically anyone. There are obviously some requirements, but the whole non-accredited thing would be a lot easier. Well, it goes away, that requirement. Some other requirements, but we'll talk about that later. But anyway, yeah, hopefully that answers that question. So stay tuned. So another thing that I wanted to touch on. Let's see here. What was it? Oh, yes. Okay. Another thing that I wanted to connect on was this idea of the great flip-flop. So I just wanted to take a minute to talk about that. So the other day, and maybe I shouldn't have done it, but I generally try not to, but the other day I saw a comment from somebody who's like, I just can't trust Kevin anymore after he flip-flopped in January of 2022. And I'm thinking to myself, like, how could I have done that any better? And so for people who don't know, let's give you the time frame. Basically what happened was on the all throughout January of 2022, I'm buying the dip. And starting in around January 5th, when we got the January 5th, we got the Federal Reserve's FOMC minutes from December. I'm like, oh God, this is really bad. In fact, you could look at that video. Just type into YouTube, Meet Kevin, worst Fed report ever. And you could see, I'm like, this is really making me question the narrative. This is a problem. I'm like mind blown. So I'm mind blown starting in Jan 5, but I'm still in the habit of just buy the dip, because that's what we did back in 2020 and 2021. We picked our favorite companies and buy the dip was the strategy then. And in January, we're continuing with the strategy, and we're starting to get more and more evidence that we're about to go through an SH9T storm, that things are about to go really bad. And every day I'm researching and studying, and every day I'm kind of like, okay, this is starting to sound worse and worse and worse. And I think the last time I bought the dip was somewhere around January 18th. And then on the 19th, I stayed up essentially all night. And I had this massive whiteboard in my garage. And I felt like a mad scientist where or maybe not a mad scientist, like one of those detectives that has a pegboard. And you've got papers and reports everywhere. And you're putting all these connections together. And it dawned on me that night. I'm like, holy shit. Like, we're about to hit a really bad time in the stock market. This is very bad. And so on the 20th of January, I stopped buying, and I'm like, how I made the determination that, okay, there's a really good chance we need to sell. And so from memory, I sold everything on the 21st. I believe it was the 21st. It was either the 20th or the 21st, but I believe it was the 21st. It was a Friday. So I sold everything on Friday, the 21st. And then I made a video within like 12 hours of selling everything, which it took a while to make that video, because it's not like something I could just sort of be on a live stream and be like, by the way, I sold everything, because the first thing people are going to do is be like, why? So I took about 12 hours to make a video, and I put together a really detailed video trying to explain, what took me all night to put together. And I'm like, hey, here's why I sold and why I think we're going through an SH9T storm. And I don't know what it is, but some people think that flip-flop was like somehow a stab in the back, like I went from Mr. Buy the Dip to Mr. Sell, and that somehow that was like a backstab. And I'm thinking to myself, like, isn't that what you're supposed to do? Like, if like the facts change, which we were right about, wouldn't you want to know? And I was thinking to myself, like, is it better to just be like Tom Lee on CNBC and in January of 2022, everything's great. February, everything's great. March, everything's great. April, everything's great. Every single month, everything is great. Meanwhile, the stock market's doing that, And I'm like, come on, man. What was I supposed to do? Again, it's not like you could just, throw in like, oh, by the way, everyone, I sold, because you know, to some, you have to have an explanation. So I don't know. I definitely felt like did the best I could with the information available. But I found it was really incredible seeing some of the commentary about that. So I don't know. I guess I'll leave that open to commentary from y'all. Like what is someone supposed to do? But anyway, who knows? Yeah. Yeah. Okay. He simply said you'll be back and gave viewers the right. What do you mean? Death row sake. Like you could literally YouTube exactly what I said. So like maybe this is where there's like a memory lapse either from me or you. But I mean, if you just type in Kevin, if you type into YouTube, meet Kevin $20 million bet. If you type that in, it's extremely clear. It does not say, in fact, a bunch of people made videos about it. Why I sold stocks in crypto, a $20 million market bet. And if you go to the video, it literally says that I sold everything. Now, I don't know if people didn't make it to that part of the video, but quite frankly, that's your problem, not mine. But here it is. Like I'll play it right now. And again, I'm like, maybe I'm missing something, but like how freaking clear could I be? So what do we have here? It literally, look at that. January 22, 2020. Here's a full 35 freaking minute video talking about my promise, World War I depression, break evens on buy the dip, cheap money coming to an end in disinflation, Fed's deadly balance beam, psychology where good news is bad news, the reality of earnings season, debt bubble and principal loss. Look at that. We were talking about the debt bubble back then. Good news, when markets rally. I basically gave the explanation of when the market's going to go up again. And then here you go. This is what I said. Like crazy. I don't really think markets can rally on anything other than January 25th and March 16th going substantially better than we believe, as I've described how the market tends to historically react. 30. Now, I've sold 99.15% of my stocks and my entire crypto portfolio. Of the cash that I have right now, I am 5.56% short the market. So of the cash I have, I'm 5.5% short the market with a put. I don't know how much more clear that could be. I don't know. That's my vision, I suppose. Okay, there's still people now complaining about the stupid internet connection here. So let me try. I mean, there's nothing I can do other than trying to hotspot. But God, I don't think that's a good idea. I could try it, but you know, today people seem to be very fussy about this, and rightfully so if the quality's bad. Yeah, it's what I'm noticing. I keep getting a little alert here. It seems to be going in and out. So I don't know what's up with that. But let's try flipping for a moment. Stand by for 1 sec. Let's see if this works any better. Okay, is this any better now? So wait, hold on. Okay. No, that definitely is not. One more second. Okay. So this is either going to be better or worse, but we'll give this a try. So somebody says, yes, it freezes for some moments, but we could hear you all the time. Quite frankly, as long as you could hear me, I think that's just what we're going to have to go with. So far, so good. Okay. All right. Fingers crossed. All right. So as long as you could hear, I'm happy with it. So, so let's go back to this. Do you know what date that was? So again, that was January 22nd, 2022. Steve here says, Kevin, I sold everything in November of 2021, all cash, all 22 based on your comments of inflation and the potential Fed increases rates. I heard you loud and clear. Thank you for that. I remember you fully explaining yourself. People are stupid. Oh, well, thanks. You explained yourself well. Well, thank you for that. Yeah, so some kids just don't understand. Yeah, anyway. So yeah, I mean, like, if I'm missing something, let me know. I'm a big fan of, okay, good. It's, as long as it freezes less. Now it's freezing less. Put a hotspot by the window, maybe. I don't know if that'll make it better or worse. It's exhausting. People just want to hate trolling. I mean, maybe, maybe people are just frustrated and they need an outlet or whatever. But I was just thinking about it. I'm like, I should ask in the live, like, what is someone supposed to do when they change their mind? Somebody says, still sucks. Dude, this is so frustrating today. I could try a different. Let me do this. Hold on. Okay. I'm going to try a different cable. That's all we're going to do. Okay, and then we just need to keep going. Well, I've actually of all the times I've ever streamed before, I don't think I've ever had this. So let's try this. All right. All right. Whatever. That's all I got right now. So, okay, let's now get back in terms of trying to fix here. So, okay, all right. Now we've talked nauseum about the internet and also what's going on with this idea of flip flopping. And if it doesn't work anymore, then you'll just have to listen. I'm just going to stop worrying about it. All right. So now, what else do we want to touch on? So let's try something different here. Okay. So let's look at 5-year break evens and the forward-looking data that we have on El Market. It works in 240p quality. This is so frustrating. I don't know what to do. I don't know why it's doing this today. I honestly have like no idea of why this is what to do. It's very frustrating because I want to talk about it, but I want to fix it. Hold on. What the fuck is going on? Forget it. There's nothing I can do. Everybody's complaining. I think I'm just gonna have to end the stream. I don't know what to do. It's like every 2 comments is bitching about the internet. God, why? I never have had this issue. I mean, it's so weird because it's literally saying I have a 600 megabit down right now. It's 800 up. So there must be like a throughput issue because we're on Ethernet. There's some kind of throughput issue with probably just the modem because it can't be the internet here. But I can't fix that. It's so funny too. I just canceled our second ISP. Should have kept it. All right. Well, yeah. I'll come back when I fix it. Bye.